Hi, I'm Kyle Hill, one of the partners from Diversified LLC. Over the next few minutes, I'll provide an overview of the first quarter of 2019 on global financial markets and our perspective on them. Investor sentiment took a 180-degree turn with the start of the new year. Stock markets rallied around the globe through most of the first quarter, reclaiming much of the fourth quarter's losses. The S&P 500 index posted a double-digit gain, and global equity markets represented by the MSCI ACWI index moved nearly in lockstep. Last year, we stated that growth in certain non-U.S. markets would likely outpace the U.S. moving forward. A look at country-level components of the MSCI ACWI index highlights the results. From the beginning of the fourth quarter 2018 through the end of the first quarter 2019, U.S. stocks ended up in the middle of the pack with an overall decline of about 2%. By contrast, Brazil, Indonesia, the Philippines, Hungary, and Hong Kong all saw returns in excess of 10%. Looking back at the past 2 quarters is interesting in several ways. The sharp drop and rebound in equity prices highlights the unpredictable nature of market volatility. While investors most often think about volatility in terms of stock market declines, volatility can also lead to significant gains. Likewise, the results in Brazil, Indonesia, and other top-performing countries highlight the potential benefits of diversification. Taken together, they serve as sound arguments for the time-tested strategies of diversification and long-term investing. The plunge in risk assets during the fourth quarter and subsequent bounce back in the first quarter of this year are a reminder to always expect the unexpected when it comes to investing. In a world where the best and worst performing asset classes tend to dominate the headlines, it can be easy to forget that diversification has been a prudent approach for meeting long-term investment goals. Thank you as always for your trust and confidence.